Hello, this is John Piper with the weekend video clip, and it's Saturday the 26th of November. I thought to start with a long-term chart of gold this morning. This actually chart was sent in by a subscriber who I'm assuming is bearish from his comments on the chart. Basically this is the low we saw around just before the new millennium. I'm counting this as a 1, 2, 3, 4, 5. I actually went long of this. We had a nice triangle here, and one of our better signals in 2009 was to buy gold at that point. Now counting all this as a wave 1, I haven't got a longer term chart, but obviously that's a fairly impulsive move. We then saw the peak, we then saw an A, B, C decline, B wave. We then fell back. The scribe in question put in this 55 month moving average. I'm not sure how significant this average is, but certainly it's significant at the peak here. But then if you want to prove a point, you could find an average to do anything. So I'm not saying he's done that, but I'm not aware the 55 monthly average is of particular significance. It's bound to have caught the decline. It was then retested, which is a plus in its point, and it's been retested here, which is another plus in its point. My count is this is a corrective move, and we saw the peak at 1900, around 900. We saw those around 200, thereabouts. So the total rally was around 1700. 50% of that is 850, and that gives us a key 50% retracement level around here, which is where, of course, the market found support. Right, we then rallied in what I'm calling a wave 1, and we've now fallen back, and we're just below the key 1200 level, which is another 50% retracement level. So at this point, we have got a wave count which suggests we could bounce here. I'm not saying it will bounce. I mean, the fact this guy sent this chart in on the basis that this is a very bearish chart is encouraging. I mean, the more people who are actually bearish, who sold the market, then the more likely the gold is to rally. The more people think it's going to go up and have bought the market, the more liable it is to fall. There could be a consensus now. It's been quite a big slide. We could be certainly do some kind of bounce at this point in time. Let's go down to a shorter term chart. This is a daily chart. My count is this is a 5-wave move. 1, 2, 3, 4, 5. Some of those patterns aren't that well formed. Then I have an A, B, C, a corrective form. B wave, C wave down to there. Then we have this ABC move to there. And currently we have a C wave of an equivalent length, slightly longer now than the A wave, but not significantly so. Clearly in terms of time though, it is quite short. So that is one factor for more downside. But 1200 is always a key level, and the fact that we're pro below it, we've seen acceptance below it, but we've seen a bit of a spike. Let's go down the leg again. Now what I'm about is low risk trading opportunities. And longer term counts are obviously important. I've given my interpretation, which I think is positive at the moment. It's only positive though as long as we do hold the 1200 level. In essence, I think at the moment there's potentially holding it in the sense it hasn't shot down hugely, and we now have a possible 5-wave advance here. 1, 2, 3, 4, 5. I've also got an A, B, C down to there. So this is now a key support level. If gold can hold that level, and of course this level as well, this is a more critical level, but this is also important, then we could start to see some positive action, and we could see a reason to go long of this market. What I'd like to see here is a good rally. I'd like to see the market move back above 1200 and spend some time around 1200, perhaps a retest. The buying spike would be nice. I mean, that spike there is quite nice, but it's fairly short term really. This is only a 5-minute chart. Interesting, the 55, this is the 55 unit moving average on a 5-minute chart. The market is just poised above on that. I wouldn't say going above that was necessarily particularly significant, but you never know, I guess. Anyway, so no big call just yet. I want to see a bit more before I actually send out an alert to buy gold. And I say I want to see acceptance above 1200. That will give us a longer term stop. Those of you who want to get who prefer to take shorter term positions have a stop level there. But I'll be leaving any big call until we see rather more than we have at the moment. Right, quick look at silver. This is a 15-minute chart. From that point here, we have got 5 waves down. 1, 2, 3, 4, 5. couple of, well, a bit of a spike, not much on that chart. So that's, well, again, it really isn't much to write home about. You feel a good base has been built. Have got a double bottom there. Then that would obviously be a level to put below which to put stops if you feel inclined to go long at this point. I'm planning to wait a bit longer on silver. I think gold looks more positive, but silver is not so much. Nothing to say on FTSE really, just is still drifting up. Bit of a spike high there, I think a bit of a spike low there, so not too much to say about that really. It's just drifting along. The DAX and the Dow doing similar things. So I think I'll leave the time being until we see more action. As I said before, I think it's more likely we're just going to drift up into Christmas now. Doesn't mean any particular reason why we should see any particular action. That could apply to gold and silver as well, actually. It may just be a time to wait and see how things develop before we take more action in the new year, but I'll keep you updated, obviously, as we go along. So have a great day, thanks for listening, and bye for now.